Ladies and gentlemen, welcome back to the one, the only, sometimes replicated, never duplicated, breaking Bitcoin market update, as always, with your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic on this slightly chilly here in the Midwest Wednesday afternoon. As always, we're very proud to host the fastest growing online community of cryptocurrency traders and investors. To stay up to date long after the show is over, make sure to join our free Discord at discord.crackingcryptocurrency.com. I swear one day I'll have a graphic that pops up when I say that. As always, the link is down in the description. And if you would like to, support the stream, you can do so with a simple tap of the thumbs up button or a simple tap of the subscribe button if you're not already. And if you're following on Twitch or DLive, of course, follows or subscriptions are always appreciated over there. For more information, check out premium.crackingcryptocurrency.com. We've got a lot to talk about today. I would say that the biggest narrative I see unwinding right now is in relationship to the Great British Pound's absolute descent, like it was a shitcoin birthed by Do Kwon himself, into the bowels of El Diablo. As we covered in yesterday's episode, the UK only has about 3% of their GDP in foreign exchange reserves, so they really don't have any dry powder to defend the sterling, as opposed to Japan and Switzerland, which have significant reserves, as opposed. So we've got some big economic catalysts coming up that I have added to my calendar. Let me pull those up just for the sake of conversation. Guys, we've got a volatile couple of months coming up. So just so you're aware, we're going to be having probably the first, and not super significant, is coming up on October 7th, we're going to have non-farm payrolls. But then on the 12th of October, we're going to have minutes from the FOMC and then a new CPI print on the 13th. Next week, we're going to have UK CPI and the People's Bank of China interest rate decision, followed the very next week by the Bank of Japan's interest rate decision, followed by an interest rate decision the very next week, November 2nd, from the Fed, and then another Bank of England interest rate decision. So October leading into November is going to have a lot of catalysts, a lot of macroeconomic fundamentals that could really dictate the way that the market moves moving forward. And the biggest narrative that I see unfolding right now from the bulls, from the Bula side of the aisle, is that with the GBP in such decline, the narrative goes something like this. With the GBP in such decline, right, the Bank of England is going to be forced to step in and begin printing money to defend the sterling, which is terrible. If you're a traditional investor in the UK, then you're holding UK stocks and bonds. And what you've seen just now is your portfolio get completely wrecked by skyrocketing yields on your bonds, which means a resulting drop in the nominal value or price of the bonds. So you're getting completely hammered. Here's the thing. Those yields that you're going to be being paid out in, the yields that are skyrocketing on your bonds might seem attractive, but here's the thing. You're going to be being paid back in a weaker GBP because the value of the currency has collapsed and bond yields are paid in the denominated currency of the country that issued the bond. So you're getting paid back in GBP, but that GBP has a lower purchasing power than the GBP that you bought the initial bonds with. So a really bad situation over there for our UK brothers and sisters across the pond. And again, there's not that, this always sucks, of course, for the people, just like it always sucks, of course, for the people that are in the countries of any calamity or any disaster, be it economic or otherwise. But there's not too much that these countries can do. Like central banks, we've discussed this before, as Alex Pearson sagely pointed out, only have a few levers in which they can control monetary policy. And it generally is a very ham-handed approach. These things take a lot of time to recover. These things take a lot of time to play out. But anyways, getting to the narrative from the Bulas, all of this money printing that the UK, that the Bank of England is going to have to turn on, might even be complemented by a softening of the stance of the Federal Reserve as they pause and begin purchasing bonds to attempt to help and bail out the UK to assist their currency. This is going to mean, in a sense, the money printer being turned back on, Jerome Powell being elevated back to the land of the bulls as the money printer goes burr. And that is the fundamental macroeconomic narrative that is shaping the conversation today in all of the avenues that I monitor, whether it be Twitter or Discord or Telegram. So is it possible, and let me know in the chat and down in the comments if you're watching this afterwards, do you think it's plausible that this collapse that's happening over in the Eurozone, of course, being further culminated by the fact that over yesterday and today, we do have data coming in on the Nord Stream pipeline. This is a natural gas pipeline that is supplying the Eurozone with energy, that it has been sabotaged. And all results, of course, are initially pointing to this as sabotage or vandalism coming from the point of Russia. We don't really have all that full information right now. Of course, when you're a ghost hunter, everything looks like a ghost. So of course, Russia is kind of the villain on the Euro scene right now. But if it is the case that this is Russia, and honestly, even if it's the case that it's not Russia, this is certainly going to exacerbate the energy crisis that's going on in Europe moving into the winter. And this is certainly going to exacerbate tensions between the Eurozone and Russia, which could potentially fuel even more the Russia-Ukraine situation and conflict. Again, all of this I would generally consider to be negative for the markets. However, there is this growing population of analysts and traders who do believe that this is actually the fundamental pivot point that we might have reached, where now the money printers are going to have to force to be turned back on, which all that capital is going to be good for risk on assets, because we like money printing and we like money printer go burr, and that's what makes our risk on assets go up. And so for us here in crypto land, this is again maybe our new opportunity to get in and cash out. So let me know what you guys think in the comments, in the chat on that. Do you think that this is going to cause the money printers to be turned back on, or is this net negative for the macroeconomic situation, in which case we really shouldn't expect a change of the bull market anytime soon? Cryptocurrency markets are in a bit of a slight Russian sabotage. We want your rubles. Yes, everything denominated in the ruble, comrade. Okay. We've got a lot to talk about today. A lot of interesting charts. Obviously, Bitcoin doing things that Bitcoin does, pushing back up. A lot of altcoins pumping today, pushed back up to resistance. Overall, it's been kind of a mixed bag. Some things dumping, some things pumping. So another Christmas tree day, or Christmas holiday day in the cryptocurrency markets today, as it has been. We want to be especially careful taking positions. We just did a fantastic mentoring session for the Kraken Cryptocurrency Premium Trading Group. In today's mentoring session, we analyzed the buy-sell volume and buy-sell count indicator that is being provided by Coinalyze on lower time frame data. And we went over ways to use that data to optimize trade entries and exits. That information will be edited and uploaded to our online trading academy for future learning by those who were unable to attend the session in person. So, all right. We've got a couple announcements today on our partnership with DeFi Olio. They have made some changes to their lifetime NFTs. So if you guys did purchase that lifetime NFT for access to our partner DeFi Olio, there's going to be some nice updates coming your way. I'll be announcing that here in a little bit. And also, for those of you who do trade on Bybit, the exchange that we trade on, a little bit of an update on our referral program for individuals that have signed up to Bybit through our referral program. We've got some exciting updates for you guys. And for those of you who haven't signed up to our referral program through Bybit, some exciting, interesting opportunities coming your way, only for those who have signed up with our referral link. All right, with that being said, let's get in, start analyzing the charts. We're going to begin today with total. And as always, if you have questions or comments, feel free to drop them in the chat and I'll get to them as soon as I can. Let's roll. Oh, not that one. Wait, this one. Yes. Man, this guy is going to figure out how to operate his OBS one of these days, I swear to God. Okay. All right, we are going to, of course, please reference today's market analysis. Amazing volatility. Is this the reversal we've been praying for that has been published to our website, krakencryptocurrency.com. Link is down in the description. As we can see, the total cryptocurrency market cap at the time of this writing is up about 0.84%, or about 7.5 billion. That's Billy with a B. Today's, we'll actually pull up the chart so we can analyze this. BTC fundamentals, total coming from CryptoCap on the daily. And let's get our VRVP and our baseline and our EMAs on there. All right. Okay. So as you guys can see, total cryptocurrency market capitalization is trading at the bottom area of its value area distribution right now. We're also trading right along this high volume node, as evidenced by volume profile visible range. Volume has been exceedingly high on the increases or decreases in the market cap over the last couple of days. So very interesting. A lot of buying, a lot of selling going on. This is a juicy area because we're in a consolidation area. But again, nothing's really changed the fundamentals of the market that we're trading in as we look at that data coming in mostly from Glassnode. That really strengthens the argument that right now, old market participants, old coins, hodlers, whales, they are not really doing much of anything on chain. They're really strapped in, battening down the hatches and ready to go wherever the Bitcoin ship wants to take them, meaning that all current market churn, really all current market volatility, is being dictated and controlled by short-term speculators, short-term holders. And the reality of the situation is that as Bitcoin is 40% of the market capitalization, we can use that as a good proxy for the rest of the market because it's the biggest, the baddest, the best, the boldest of the crypto assets. And right now, with Bitcoin losing the $20,000 level once again, that puts almost all of the short-term holders in an unrealized loss situation, which makes an environment where pumps are generally short-lived as they are sold into by these short-term speculators that are underwater on their positions. And this is why resistance levels become so difficult to surpass and grow above, because the simple fact is that all of those earlier positioned traders who are underwater are taking the pump opportunity for exit liquidity. They're using people who are, not I'm saying you, but people who are market buying the top, so these pumps, you know what I'm saying? They're using them as exit liquidity to get out of their positions at break even or perhaps even a slight loss. Anything to stem the losses, anything to reduce the absolute financial carnage that the bear market has wrought upon the crypto natives, the crypto true. But here we are, the blue, the true, the long-term traders. Yes. Okay. So, the structure of today's daily candle, looking at our entire market capitalization, is a hammer candle doji. This is a squat candle body with a long price tail to the downside. This is often associated with price reversals or market indecision, typically more associated with price reversals. Again, we already had one of these candles over here. It was a fake out, did not have any follow through. So even though hammer candles are typically associated with market reversals, it is not always the case. You have to take in the fundamentals and the macro. Now, we are now trading slightly above our 8 daily exponential moving average, and we are finding resistance in the form of the 13. Again, this is nice. This is typically okay price action. I don't like the fact that we, again, are grinding along support. Grinding along support is typically not a good thing. Typically, when you grind support or grind resistance, you end up breaking through. So, again, something to be worried about and why it's very important to be taking risk-adjusted position sizes right now, to not be going all in and to be protected in the case of downside. Again, me personally, my portfolio is still majority stable coins. I'm trading in and out of USDT to take advantage of short-term opportunities. That's being very profitable for me. And as far as my BTC allocation, I have allocated 25% of the total allocation that I want for Bitcoin. Again, let me really drill that down. Not 25% of my portfolio, 25% of the total allocation of my portfolio that I want towards Bitcoin. So if I know that in totality, I want to have $100,000 allocated to Bitcoin for the next rally, so I'm DCAing here, then I'm only allocating about $25,000 here in this current range, with the preparation to allocate the other $75,000 as price declines further towards our downside targets of $17,000 and $13,000. Let's see here. All right, we are at the bottom of the value area, as I already pointed out, and our moving averages, while they are above us, are beginning to narrow and go flat, which is typically a sign of consolidation, or again, sometimes potential trend reversal. We are still trading underneath the range point of control, so there is stiff resistance above us. Remember the market fundamentals that we're operating in. We remain in a regime dominated by short-term holders and short-term speculators, and as most of them are underwater, as prices rise, if we do experience a bear market rally here, those market participants will take those rises in prices as an opportunity to exit their positions as break even, contributing to the difficulty to break through resistance. Again, volume on today. What's going on? Profit Bear resubbing for another 22 months. Oh my goodness. Thank you so much. Much love to you. Thank you for the shout outs, my brother. And thank you so much for all your support and being a member and supporting the YouTube channel. Thank you so much, brother. Let's see here. Volume on today's market cap move is exceedingly high, similar to yesterday. As we can see here, bullish divergence is playing out here on the total market cap on the daily, lower lows and higher lows here. It's also playing out on the weekly time frame. You can see this with almost any momentum oscillator. Of course, we do like to use Minx, but RSI is showing this, Stochastic is showing this as well. So a lot of traders are getting very excited about this and pointing towards this as a sign of a reversal. We got tea time with Wayne asking for a look at the OCT USDC chart. Yes, absolutely. Towards the later half of the show, when we get into the chart requests, I'll be happy to take a look at that for you, man. Thanks for the support. Let's see here. Overall, this increase in volume in this current candle structure and us drifting slightly higher than our support level is beginning to set the initial stage for a bear market rally. So again, we maintain the stance that risk-adjusted long exposure is the correct play here. But again, we are still operating in a bearish macro and fundamental environment. So I don't want you guys getting too over your skis or too excited here. So you want to take your long positions here with the correct position sizing. And what I would recommend we do is once we start experiencing exhaustion in the bear market rally, if we do experience one, is begin looking for opportunities to layer in short positions so that you can get a really good profitable movement on the next capitulation or downside. To be able to position right at the top and then just ride that baby. I mean, if you're lucky all the way down to 17, 13, I'm talking make up all that money that you lost in the bear market, ideally. Alternatively, buying downside protection in the form of puts with option contracts is definitely an option for the savvier trader out there. Just be aware that premiums are a little high right now, so you are going to be overpaying most likely for put protection. So you're just going to have to do some cost-benefit analysis, and then also risk-adjusted position sizing, very carefully choosing the lot sizes and your contract sizes when you're purchasing your downside protection. All right, so that's overall for total cryptocurrency market cap. Any questions on that, feel free to drop them in the chat. Let's go ahead and move on over to the big daddy, Bitcoin, the one, the only. I want to point this out. We did, of course, make a bullish. We've been recommending risk-adjusted long positions for the majority, actually for all of this current about week or so that we've spent down here grinding the lower area, the lower distribution of the value area. On yesterday's pump, we actually already did knock out one of those profit targets. So I'm going to go ahead and continue to hold that recommendation open. You could even enter now on today's current market movement. And you can continue to use that same take profit target. So again, upside targets are 19,882, 21,378, and 23,122. Rewind it if you missed it the first time. We're going to always be here live, replayable. Bitcoin itself is up about 2.5% today. We are quickly approaching that point of control initial level of resistance at that 19,882. Still grinding along that lower level of support overall from a macro perspective, which is kind of spooky if we're projecting out into the future. Oftentimes when we grind support after multiple tests of it, that is really the warning sign that we're going to be breaking. So for Bitcoin traders right here, for the guys of you out there who are actively positioning right now, you've got to be prepared to dump long positions and potentially open up momentum shorts if the levee breaks and we break down. There is a very, very large air gap of liquidity between 18,000 all the way down to 10,000. Not necessarily in the form of liquidity on the order books across exchanges, even though liquidity has severely dried up, but certainly in the extent of positioned traders, right? There's actually, if we analyze the volume by price between 10,000 really and 20,000, 18,000, excuse me, we see that there is a massive air gap between 12 and 18,000, meaning that is really a low volume node territory. And what do we know about the behavior of price in low volume nodes? Price likes to grind through high volume nodes. You get a lot of volatility, but when we enter low volume node territory, we tend to cut through them like a hot knife through butter. So I'm very concerned, not very concerned. I am expecting that if we do end up breaking down below 18,000 and find price acceptance there, not just like a wick down and a wick back up, but if we get price acceptance below 18,000, it's probably going to precipitate a very quick descent down to those lower price levels. First stop 17,000 and then down below that, below around 13,000. So definitely need to be concerned. This is a very tricky time to be a trader, a very tricky time to be an investor. There's a lot of profit out there still, a lot of open interest, a lot of money in the market, so all kinds of opportunities. But this is not the time to be lazy with your trading. You really need to be disciplined. You need to understand what's going on right now. You need to be having the correct positions on to take advantage of all the volatility. Okay. Moving averages are beginning to contract, get tighter together, which often indicates trend reversal. They're going flat, which indicates consolidation. So all good. We've had a lot of accumulation, and look at the increase in volume around this area. This is very juicy, very nice to see. As I said, Minx and the relative strength index, all our momentum oscillators are printing regular bullish divergence on both the daily and weekly time frame. So we are kind of setting the stage here for a nice another bear market rally. Unfortunately, we are going to be expecting another lower high here is the most likely scenario. So while I think we will likely wick up to that 21,378, I do feel that overall price will roughly stop in that area. You can see our baseline coming right around here at about 20,877. And that's exactly where price stopped on the previous rally in this bear market. So another surge up, another lower high, and then the most savviest thing to do would be to, and you can see that also corresponds to the upper area, the upper distribution of the value area there, as evidenced by our volume profile. So definitely looking to layer on shorts there. But here's the thing. I don't want you to just set blind limit orders because we could have a more powerful bear market rally here. This could even be the bottom, guys. It's always possible. So instead of blindly layering on shorts here, just because we're at resistance, I want you to stop and I want you to wait and react to price, not predict price, but react to it. Because what we want to see is we want to see exhaustion and then price begin to move down. We want to see more selling than buying. We want to see market order flow flip to the negative. We want to see open interest begin tanking. And then potentially not potentially, but that would be the signs of strength to be dropping long positions and opening up short positions for the contraction and back down to the downside. Looking at Quadriga, if we are going to be scooping up long positions here, Quadriga is recommending a stop loss directly below our swing low right here at 18,000, about 18,044, 18,045, right around that range. So again, Quadriga is suggesting a very tight stop here with regards to the market structure, and then looking for those upside targets that we already discussed. Now, going down to the Meso time frame, obviously we had a very nice movement today. I do have the moving averages set to be on the daily time frame here. So we can, this is multi-time frame trading. We've discussed this a whole lot. So yeah, here you guys can see that the big moves here on the chart, 45 minutes sell off here down to the bottom, nice double bottom. We actually took this trade here. Nice little profits off that short swing. A lot of volatility here on the 45-minute time frame, but again, we contract, we expand, and then we have this nice pump up. We already analyzed this movement yesterday. Swift decline back down to our level of support, and now price is making that about 0.618 retracement back up into that rally. So for those who are short biased, of course, you can be looking to opening up shorts here. As you guys can see, we are actually at the 21 daily exponential moving average level of resistance. But again, I'm a little bit more in line with considering upside here, and I'm already positioned for the downside. So I am expecting a little bit more here. Yeah, so I want to bring back that VPVR. As you guys can see here, when price broke above the value area, we rejected right back into it real quick. So pay attention to deviations from this value area. There is a lot to be said for the range trading strategy of reversion to the mean. Once price breaks above the value area, taking price back down into the value area because deviations, because the majority of volume is being transacted here. So this is considered fair price. So when there's a deviation from fairness, the market wants to bring it down. Kush, thank you so much for the subscription over there on YouTube. Highly appreciated, and welcome to the community, my friend. Let's see here. Yeah, so let's zoom in a little bit more on today's price action. 45-minute time frame, we are in an uptrend on the hourly here. We are, excuse me, I'm gonna zoom back out to really get a good picture of that. We have had a little bit of, we have had price acceptance. This is nice to see. It wasn't a swift up and then go sideways. This is more controlled. Here we go. This breakout above the value area is more controlled. We are trading above the hourly baseline right here, and we've had acceptance, price acceptance above our value area. Acceptance above our value area is very important because it does lead strength to the fact that the trend can continue. We are above all our major moving averages. We'll actually turn that off and use the current time frame resolution. We are above all our major moving averages. We had a nice pullback just a few hours ago, back down to the hourly baseline and our 21 exponential moving average. So good opportunity to buy the pullback. That's exactly what I recommended in today's market analysis. Yeah, so I said pullbacks to 19.3, 19.2 could be bought. That's exactly what happened. And I would recommend placing stop losses on that pullback. I recommend placing stop losses at stop losses placed below the current value area, about 18.6. Or directly below the swing low, you could do as well. But again, I preferred this area right here, about 18. So, yeah. So again, price action structure is looking bullish on the daily and on the 45. We've got acceptance above the value area and price ranging up. we are, of course, as always, going to turn to our lower time frames to see fundamentally beneath the hood if there is fuel for this on our exchange of choice, Bybit. Okay. All right, so we're going to pull up the 30-minute time frame and see what we see here, okay? And overall, I would say that this is... Okay, let's see. Okay, so a lot of stuff going on here. We've had a consistent rise in open interest ever since the dump followed right here. Here's the initial dump a few days ago, following that pump up. And you can see that open interest is rising throughout this entire area and this bottom double tap of support. And open interest has consistently been rising here. Obviously, this candle right here did cause a pretty significant drop in open interest, but as price has climbed back up, open interest has risen right back up to support it. Things were looking very bullish throughout most of this trend, but of course, we want to understand what's happening now. Right now, looking for a long side play right here, I think is relatively risky. And we can see that data very clearly from the rise in open interest throughout this area, and also the fact that funding has flipped negative, something that happened yesterday. This is exactly what we've been noticing happens following a dump. Once funding flips negative, it's usually a sign. And we even have more strength for that argument right here. If we look at the buy-sell volume indicator, it shows us very clearly that from starting here, there has been more sells than buys. So all this rise in open interest is really correlated to the addition of short positions. And while that does not mean, that price is going to reject, all of these things together have shown to be statistically highly correlated with rejections in price. A pump, price moving sideways, buy-sell volume is on the decline, indicating that shorts are in control, and there is a correlating rise in open interest, indicating that it's quite a lot of sellers who are putting on those short positions. So I definitely do think that looking for long positions directly from this consolidation area is tricky at the best, perhaps not the best idea. We definitely want to see price break above these highs in a very convincing way, and buy-sell volume and maybe our cumulative volume delta flip back around, showing that there is now a new wave of buyers. I would like to see the shorts get liquidated. That would let us know that they've been kind of flushed out of the market. And I need to see open interest continue to rise throughout all of that. But just looking at this lower time frame chart right now on the LTFs, it does look like Bitcoin does want to reverse. So potentially short positions would be profitable out of here. Now, whether this continues to lead in to that kind of higher time frame and meso uptrend are yet to be seen. But notice that we had that pullback in Bitcoin's price here. We had that pullback in Bitcoin's price back to that 19.2, 19.3 area, and price rose just back up to resistance. So again, the daily doesn't look too bad. The 45-minute doesn't look too bad. But when we drill down and see what's going on with the volume, things are starting to look sketch, and it does look like the strength of this current rally, at least its current movements, is starting to weaken, and shorts are really starting to position themselves here with a lot of strength. So long traders at this current moment, like entries right now, I would definitely beware. Okay. Double checking something over here. Okay. All right, 405. Let's go ahead and yeah, let's do a couple of quick announcements here. So give me one moment here. Okay. So Our first announcement here is first announcement here, as you guys are likely aware, we have partnered with DeFiolio. DeFiolio is a cryptocurrency startup that is looking to build a better D-Bank. So this is an investor hub that gives you the ability to monitor all of your DeFi and cryptocurrency positions from one convenient hub. It allows you to see exactly what you're farming, exactly what you're pooling, exactly what liquidity pools you're in, your borrow and lending. And not only to be able to see that all in one convenient location, but to also be able to interact to increase your leverage amount, to increase your borrow amount, to execute positions, all of these things. So just a better, more customizable, more personalizable D-Bank. Also with technical analysis and information and research on the coins provided by myself particularly, and other cryptocurrency analysts as well. The way to access these features is by purchasing their lifetime NFT, which was opened up to Kraken cryptocurrency members, either community members. So they've made some changes to the lifetime NFT. I just wanted to give you an update on this. So previously, the old lifetime NFT was giving access to the DeFiolio system for life. It was giving early access and beta access for all new features. And there were initially going to be 12,000 released across 6 chains and more to be released down the road. So the changes that have been made to the lifetime NFT, it still, of course, is giving access to the system for life. You still get early access and beta access for all new features. The max supply has been capped at 12,000. There will be no more that are going to be created after this, which does. We didn't obviously purchase the lifetime NFT as an investment vehicle, but it does increase the overall supply situation, so price may go up. There's also going to be profit sharing. You can see this has been announced at the top of the screen here. They are offering 25% profit sharing for those who hold the lifetime NFT. So you will be getting, you hold the lifetime NFT as the company makes money through subscription sales, you will be getting a kickback. So just good to know. They're working very hard over there at DeFiolio. Once they have the last few features live, they're actually going to be pushing it live for everybody who's purchased an NFT or wants to purchase the subscription model. So very excited about our partnership here. The features continue to be rolled out. And yeah, just wanted to give you guys an update on our partnership with them and the new profit sharing that you're going to be getting from your NFT. Secondly, secondly, I want to give you guys an update on those who have signed up for Bybit using our referral code. I have recently had the opportunity to update my my affiliate program. Of course, you guys do not have to sign up to trade at Bybit with my affiliate program. I do, you know, again, we only promote the products and services that we use ourselves. But if you have signed up for Bybit utilizing my referral link under my account, then you are going to be getting some pretty good opportunities. I double checked because I wanted to make sure that I was only promoting or telling people the actual truth of the matter. But if you have signed up with my link, you will have access to their rewards hub. And in that rewards hub, you will not be it's not as simple as you sign up and you'll get all these rewards. You get all these initial deposit bonuses. But I did the math and I went through everything myself. So if you find any inconsistencies in this, please message me and I'll be happy to address it. But signing up with my affiliate link does give the ability to turn up to $4,480 in bonus funds that you can trade with. You cannot withdraw that money, but if you have the opportunity to basically have $4,480 of principal, and you make one good trade, one good investment, all of your profits is able to be withdrawn. So again, I think it's a good opportunity for individuals who have lost money in the bear market to be able to utilize that to perhaps make the trade that can help them start making it back. Or again, is their beginning of having a fund, a trading account that they can't withdraw the money. So you're forced to treat it as trading capital that you have to grow. Also, coming up, it's not live yet, but all of the people who have signed up underneath my affiliate link are going to be receiving a 20% discount in trading fees for several months. I believe that's going to go into effect on October 1st. We'll give you an update as soon as that happens. And then following after this, we're going to try to do an initial deposit bonus that is significantly greater than the initial deposit bonus. So I want to thank you guys. A lot of people have signed up with the Bybit affiliate link, and I want to continue making sure you guys are updated on all the rewards that you guys are available to. So again, you can double check it yourself, right? Go create a Smurf account, go create a fresh Bybit account, go to the rewards hub, sign up with my link, go to the rewards hub, and you're going to see that what you can earn in rewards is dramatically different. So this isn't false advertising. It's not false marketing. It's not fake shilling. There is legitimately up to $4,480 in rewards you can claim from your rewards hub from using my affiliate link, and it's not inconceivable. Yes, you do have to trade. Yes, you do have to deposit up to $300, but I do believe that's all you have to deposit, up to $300, and then you have to get to the trading volume, which you'll earn by just consistently trading that capital. So wanted to give you guys an update, 20% reduction on trading fees for those who have already signed up and for those who do sign up over the next 2 months. And then I'll give you guys an idea on the next promotion after this. So love Bybit, major exchange, fast service, good servers, no downtime. Fuck BitMEX. All right. Let's move on to we had a request up here, so let's take a moment to go through the chat, answer any questions. We're actually going to go down here to the LTFs and just monitor that as we go through the chats. Shout outs to Alexander Pearson, Alex81SG, Chris Magre, Tom Hardy, Caprica. We've got Over Playful. Hey, my friend Tom Hardy. I think I already said that. Ju Shui, of course, over there on Twitch. We've got, so Over Playful has a question, is buy sell volume on TradingView? So again, this is a question that was brought up in the mentoring session today. Not really, but Coinalyze is free to use. It's free to create an account. They don't charge you. You don't have to put any credit card information in here, nothing, no payments, no nothing. And you can access all these indicators for free. It's coinalyze.net. Cryptonomics, yep, I think that's good to remind people. Binance is going to be doing the auto conversion of, what is it? I think it's USD. Yeah, it's USDC, Pax USD, and True USD. Forced conversion into BUSD coming up here in about 24 hours. So you guys have 24 hours to withdraw your stable coins. You don't have 24 hours. You can always withdraw them. But if you want to use them on the exchange, they're going to be auto-converted into BUSD. So, Cryptonomics asks if I trade binary options in crypto. I do not. Binary options are like, what are they called? What are they called? Parlays, right? They're like parlays in sports betting. And, I've studied the statistics. Statistically, like even though traders statistically lose money, statistically trading binary options is like they lose even more money. So I don't think the binary options are in general relatively. I mean, listen, obviously people will be profitable, but yeah, I do not trade binary options. Give me 1 second here, guys. Oof. Okay. Excelente. All right, let's see here. All right, so Tea Time with Wayne requesting OCT USDC. OCT USDC. Let's see. Octopus Network. Yep, I do remember we've had a request for this, so let's check it out on Bybit. Looking very similar, of course, to the BTC chart we just looked at. So let's go. 1 second. Boom, bam. Okay, adjusting positions here. Let's go see. Oh, wait a second. OCT. Why is this showing me ONT? I want OCT. Right. Oh, it's not on. Okay, I'm sorry. Octopus. Yeah, sorry. Oh, I get it now. Gate.io, Huobi, let's see here. We'll go to CoinGecko. We'll search for OCT, Octopus Network, and we're going to look at the market that has the most, and that's Huobi. So we're going to be looking at Huobi. All right, OCT USDT. Yeah. All right, cool. A chart that looks different from Bitcoin. Very nice. All right, let's start off with the weekly. Okay, not too much data here on the weekly dump since its decline. You know, typically in nicer markets, a dump right after listing is usually a good thing. There's a period of accumulation and then a lift off to the price. We do currently have a higher low following the initial market dump down to about 30 cents. What are we currently trading at? About 32 cents. So far a higher low. Of course, all our moving averages are moving down. Let's go to the daily time frame, see what we can see here. Yeah. So initial decline. Yep. And then there's the after listing dump. And then just it's been grinding out. So, you know, just in general, I'm not a big fan of these charts or these type of plays, particularly in the current market environment. You know, I would have to, this is a chart that when I see something like this, or I look for an opportunity like this, I actually have to go do some fundamentals. I have to go look at what the token lock schedule looks like, what the VC schedule or vesting schedule looks like for the early investors and Octopus Network. And such things like that. Those give you a better calendar of whether or not to take positions, better than just the raw technicals. But beyond the raw, but sticking with the raw technicals, again, our moving averages are trading. Our fast moving averages are trading below our baseline. Our medium or slower moving averages. Price is just retesting this level of support right here. So I would like to mark this off as a level of support. Mark this off as a level of support, and let's see here. We have the same kind of level of resistance here that corresponded to the initial dump and positioning here. What this means, guys, like this chart tells a tale. Okay, look, somebody bought here following the initial dump, and then they pumped it, and most, you know, some traders took their profits, and then price absolutely collapsed. But some people who bought here didn't get out. And they held throughout all of this. And this is why we see this act as a level of resistance, because it is these investors exiting their positions at break even or a slight profit here. So this chart tells a tale. So this is going to be a difficult level of resistance to overcome, especially if they didn't exit all of their position. And that's what caused this wick. That's what caused this wick, is the initial liquidity. Like, they pushed price down so far. Yeah, just good times. Okay, so that's all about, oh, sorry guys, my computer's having a bit of a slurp here. Looking at our developing value area, we can see that price is getting very close to the lower edge of the value distribution area. This also corresponds to the support area. So from a technical perspective, technically this is a good entry for a long position. Again, unfortunately, I don't see the, well, I don't want to say they're not aligned, but right now I don't have the fundamental data in front of me since this is a fresh listing. I would really want to see the vesting schedule for the VCs. I would really want to see the token unlock schedule for this, and just fundamentally know a little bit more about Octopus Network. Unfortunately, I do not. So since I don't have a clear fundamental picture on this, since we're operating in a bearish macro environment, if I were to be taking a position based off these technicals, which is good, lower into the value area distribution. Let's see here. Minx being relatively oversold here. So these are all good things to see. The full picture of the chart here. Those are all technically good things to see. So yeah, this, from a technical perspective, this right here is looking like an attractive entry point. We would be looking to take price back up to the point of control, about 36, 37 cents. So that's looking at a move of about 15%. So if we risk adjust here, what I would say is I would watch price very closely. And if we start seeing something like going down to the 45-minute time frame here, maybe even the 4-hour time frame would be good. Yeah. Volume has been consistently high throughout, so there's no big deviation or change in volume here. Yeah, so watch the 4-hour time frame. the first thing you can watch for is a break above resistance, for price to at least initially break above the moving averages, which it hasn't yet been able to successfully do. And yeah, so I just wouldn't, you can obviously, try to get some bids filled here and look to play the long game, taking price back up to the upper area of the value area or the baseline. You've got the high volume nodes to give you guidance here for profit taking. But I would be avoiding these types of trades right now. And if I were taking this position, I would just do it with lower risk. And then I would add to the position, maybe get to a full risk position trade on the meso timeframes here when we actually get a convincing break above our moving averages or even our baseline, potentially add to that position more. So potentially a promising opportunity here, but also potentially just another dud and a sea full of them right now. Oh, Mass Stash coming in strong, baby. Member for 26 months. Thank you so much for your commitment, for so much help in making CC what it is today, man, and for your continued patronage. Thank you so much, brother. Always enjoy you in the live streams, my friend. Nature Bound says, when the chart looks exactly the opposite of what it looks like now, that'll be the time. Alex81SG requesting a look at Cava. Yes, Cava will be our last look of the day. It's not much, but it's honest work, brother. All right, so looking at the perpetuals here, let's actually, you know what? I want to look at, let's look at this. Let's look at spot on Binance. We can get more market data. So we'll start off top-down analysis here on the weekly time frame. All right, so let's see here. I'm going to say right here. And right here. Right here. Yeah, I think those are our most why are we booing me? Oh, because I have a life. Oh my god. Anyways, this man. So yeah, I think I've marked out our relevant levels. So starting with this approach, we are approaching a pretty significant area. We did bounce here back in November of 2020, and that led to a very massive rally. We were also in a similar market condition there in 2020, kind of a downtrend toward the end of 2020. Price did find support with a double bottom. We've essentially done the same thing here. Tyler Heel, welcome to the chat, my brother. We've basically done the exact same thing here with price coming down for this initial test. Remember, these lines aren't perfect, okay? They're zones, okay? They're always, where price actually goes here is always going to depend on current liquidity and market participants, but the zones are what's important. So sometimes, I'll teach newer students this to do all the time. Instead of drawing lines, draw boxes, right? Wider boxes, right? So understand that you should be operating inside this box. That can be very helpful. What's going on? Mass Stash with a $5 super chat. Thank you so much, my brother. I highly appreciate that. I have heard that if you pay me more money, I make more. No, I'm just kidding. Fortunately, I do have to go out with the family following today's stream. However, super chat is always appreciated. Now he's going to come after me and want his money back. Gosh darn it. I should disable the super chat feature, man. Thank you so much for the patronage, man. I highly appreciate that. Okay. What do we got going on? So we do have this nice double drive down into support. So very similar to what we saw over here in November 2020. And maybe we, again, the narrative is evolving that we can expect. Of course I will, man. We could potentially, again, as I talked about, select Wayne Art for contributor of the year, man. Thank you, man. Thank you. We, as I said, we do have this narrative that is evolving right now of potentially the situation in the UK forcing the money printers to be turned back on, which would be positive for risk assets. I am not ready to accept that yet, nor do I think it's entirely plausible. However, I'd love to hear you guys' comments on that. Getting back to the technicals. So double drive down. Let's see what Minx has to say. Yeah, we actually have... All right, so no significant... Yeah, we do have bullish divergence on the weekly time frame from Minx. We have a lower low and a higher low on our momentum oscillator. Okay, always good to see. We're also seeing that on BTC. So this is kind of looking not the same as Octopus Network, but a similar trade setup where price is moving down toward a level of support, and we would like to see a reaction. Also interesting to note, look at how powerfully price reacted even in a bear market when price reached these levels on the descent down throughout 2022. It did react to them very powerfully. Even on this initial drive down, it actually rallied from that low all the way back up within the course of that week. Then we slid down, tested it again, back up, down. Maybe we can get a final, more powerful reaction now. So far, this is definitely falling into DCA and long-term positional trading category from the weekly time frame. So, all right, daily time frame. We do have some Minx divergence here, bullish divergence on the daily that is currently playing out. Lower low in price, higher low on the oscillator. That's showing through. We've yet to get a real good breakout here, but this is starting to look interesting. I actually now want to pull up Cava on my Sandbase screener. Yeah, of course, unfortunately, we're only tracking... just volume has been consistently dropping. We do have this nice spike in volume now, but it is lower than what we've seen previously. So fortunately, not able to analyze the on-chain data coming in. That's often very helpful. It's often how I spot big winners. Pulse Chain Poppy recommending Cava route. Very relaxing. It's very relaxing indeed. Very, very relaxing. Okay. So overall, yeah, I do like to see the bullish divergence coming in on the daily and the weekly at a significant level of support, potentially expecting some upside pressure here, potentially creating, making a profitable DCA opportunity here for the long term. Interesting. Okay. Okay. And Bitcoin, guys, Bitcoin pumping. All right. Bitcoin pumping. It said, yeah. Yeah. It said, yeah, you get scared because the buy sell volume is going down. Well, kablam. What's up? Kablam. Fuck your couch, shorts. Okay. All right. I changed my mind. Bitcoin's pumping. Fucking go along on Cava, man. It looks great. No, all right, so one final thing we'll look at here before we head for the door is Cava on Bybit, and just try to get a sense of what's happening in the short term here. There we go. Usually, yeah, so yeah, over the daily, we don't really see a bunch of accumulation. We see that this area has been marked by selling. As far as buy sell volume goes, in quantity, but interestingly enough, CVD has been climbing, indicating distribution throughout this area. So overall, we are seeing long-term accumulation that wasn't happening. We're seeing accumulation beginning here. Notice this with cumulative volume delta. All right, this corresponds to more long-term accumulation. Cumulative volume delta showing us that accumulation has been occurring in this area with rising open interest. And over this last bit, the market's been dominated by sellers, even though the delta between buys and sells has been giving more strength to the longs. So reading this, there certainly is accumulation taking place on Cava at these prices. It's actually accelerated as the prices have gone down, even though the current market structure has been dominated by short sellers, and that's totally fine. Yeah, and to be honest with you, I think from a fundamental perspective, Cava is also fulfills a lot of the narrative of coins that I think are going to do well moving forward. So good narrative there. All right, so to summarize all that, let's just give a quick look to see what Cava Bitcoin's doing. Cava BTC is holding its value very stably against the price of Bitcoin, so very interesting, and is currently undervalued. All right, so all in all to say, we are at a significant level of support. So for the long-term position traders for Cava, I'd probably make the same recommendation here that I would make with BTC. 25% of the allocation that you'd like toward Cava to allocate more at lower prices or once we have signs of a market recovery. Current level of resistance is above us in the form of 2.335. The previous place price turned around. So there might be it's actually 60 set. That's a 65% increase from the low from where we're currently at. That's targeting about 47%. So definitely a potentially profitable trade on our hands. I would be very quick to dump this if we do end up breaking below support here, same as I would with BTC, being very cautious here. But we're at a pretty important pivotal point, level of support for Cava. CVD does show that there's been accumulation in Cava that's accelerated actually as prices have reached these lows. Unfortunately, I can't peer any further into Cava because sentiment does not track, or there's not available there. Yeah, see, so normally what I'll do with a coin like this is I'll look at whale behavior or top holder behavior and see if there's been increased accumulation by top wallet addresses. But I don't have access to that data here from sentiment. So just that support, and yeah. All right. That's good. Good request, man. Good request. We did, yes. We did interview Brian Kerr. He's the CEO of Cava Labs at San Francisco Blockchain Week. You guys can check that out here on our YouTube channel and our Crypto Currently playlist. But other than that, thank you guys for joining me for another exciting episode of the Breaking Bitcoin Market Update. As always, we continually appreciate your support. If you guys have any questions, comments, concerns, please leave them in the comment section down below, as well as your thoughts on what we should analyze in the next episode. If you guys would like to support the stream, you can always do that with a gentle tap of the thumbs up button or a nudge of the subscribe button if you haven't already. And similar if you're watching on Twitch or D Live, make sure to join our free Discord at discord.krakencryptocurrency.com. The link to today's market analysis and access to our premium content is down in the description down below. We will be back tomorrow, same crypto time, same crypto network. And question of the day: do you feel that the idea, the emerging narrative that all of this crisis occurring over in the currency markets over in the UK might be the catalyst that brings back the bull market, as contrary as that may sound? Let me know in the comments down below, and we will see you guys tomorrow. Trade safely.